just the way the system is here. A lot of these 2-year deals are coming up for renewal this year, and it's really and that's the reason why I think the Bank of England is going to start cutting rates soon. And yet, as I said, the flip side is a higher gold price and a weaker pound, not just against gold, but probably even against the dollar. And we saw yesterday that Sweden cut rates. Thursday, May 9th, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to look at the Bank of England today and central banks in general. I think the Bank of England is, well, not ready, but they're already sacrificing the value of your currency. And why are they doing that? Which is basically inflation. They're debasing the currency. You just have to look at how gold is up 14% this year alone versus the pound. Back in the old days, up until 1971, devaluation was against gold. Yes, it was done against the dollar, but indirectly it was against gold. And it's ironic that back in 1967, Harold Wilson devalued the pound by 14%. And it was huge news. He even said the pound in your pocket is still the pound in your pocket. It will still buy the same. And he said maybe if you go abroad you won't buy the same, but it's rubbish, of course. And nowadays, without the limit or the anchor of a system that has some gold backing, they're probably going to devalue the currency even more. And why are we talking about this today? Well, because it's a fairly important day in terms of monetary policy, and that's what we're going to look at. Before we do, I'd just like to thank all of you for your interest in the channel. And if you're new to the channel and haven't subscribed yet to the channel, make sure you do. Make sure you hit the like buttons. Make sure you hit the little notification bell to be notified of all my new videos. I make one every day. And before we move on about the Bank of England, just wanted to let you know that I'm still a big proponent of keeping your assets safe, especially in these inflationary conditions that we're under, which we're going to look at a bit later on. I think it's